One of the most painful parts of being a small business owner is paying your BAS every single quarter, but what's worse is getting it wrong and potentially paying more tax and ruining your cash flow. I'm Jacob Farmier. I've lodged thousands of BASs over the course of my career as a chartered accountant, and in today's video, we're going to cover the 5 most common BAS mistakes I see small business owners make, and more importantly, how to fix them to ensure that you're maximizing your position and keeping your cash flow. So what is a BAS? Just in case you forgot, it's a business activity statement. It includes all of the GST that has come in and out of your business, your pay-as-you-go withholding or the tax on your wages, and your pay-as-you-go installment, which is a prepayment of your annual taxes. When it comes to registering for GST, you have 2 options, accruals and cash. In an accruals basis, you're paying GST to the ATO when you raise your invoice and send it to your customer. On the flip side, when you're collecting bills to pay for your customers. The problem with doing this is you don't collect the cash when you send the invoice. You might be on 30-day, 60-day, God forbid 90-day terms. So when you send that invoice and you have to pay GST to the ATO for money that hasn't landed in your bank account, you're gonna have a severe cash flow problem. On a cash basis, however, you only pay GST to the ATO when it actually lands in your bank account, and that can lead to much better cash flow. Generally speaking, businesses that turn over less than $10 million have the option of accruals and cash, but I find most business owners who manage their cash flow effectively are registered on a cash basis. And why is that? Because most business owners prefer to pay the GST when it actually lands in their bank account so that they can set it aside when they get it and know that their BAS is going to be taken care of with the money that they've put aside from the money that they've received. So with that being said, be sure to check if you are registered on a cash or an accruals basis, and make sure you pick the option that best helps your business manage its cash flow. Check in with your accountant to discuss it further. The second mistake I see so many small business owners make is not keeping good books and records. When your business is registered for GST, you can actually claim 10% of all of the expenses that you have that have GST in it. That all sounds great, but if you don't have any receipts, unfortunately you can't make the claim unless the actual expense is under $82.50, which is a rule not many people know about. The best way to avoid making this mistake of not keeping good books and records is to keep a separate business bank account and make sure that your family life is completely separated from your business life. It's actually a quote Notorious B.I.G. said in his 10 Crack Commandments: keep your family and your business completely separated. So go and start a separate business bank account, make sure all your transactions for business are running through the account, and that way you have one clear place where all of your business income and expenses are going out of, so that when it comes time to preparing your BAS, you have a good, accurate window to have a look at. As your business grows, you should also consider getting a software, for example Xero, that helps connect into your bank feeds and helps you manage your business finances in the most effective manner, keeping good books and records as you go in a live manner. Also, when it comes to keeping receipts, stop using the shoeboxes, start taking photos of your receipts and storing them digitally, because receipts fade over time, and the ATO has advised that you can use digital receipts as proof of record. And finally, if all of those tips still aren't helping, go and get yourself a bookkeeper. A good bookkeeper is worth their weight in gold, and you should invest in it if it's something that you're just not going to do. The third most common mistake I see is people not factoring in GST-free sales. Not all business sales are created equal. There are some sales that do not have GST in them. And one of the most common things I see is people including GST in all of their sales and overpaying their taxes. For example, did you know your foreign customers who are consuming your goods and services in overseas countries are not obliged to pay Australian GST? So stop invoicing your foreign customers for GST, and make sure your accountant or bookkeeper knows that you have invoices to foreign customers so that they don't accidentally include GST for people who aren't even paying GST. Also, there are some GST exempt services. For example, if you're in health, if you sell fresh foods or meats, or for example, if you're in childcare, some of your income may not actually have GST on them. So make sure you check the rules before you just blindly go and give 10% of all of your sales to the ATO. The fourth thing I see people get wrong all the time is overestimating your pay-as-you-go installment. But first, what is a pay-as-you-go installment? A pay-as-you-go installment is a prepayment of your annual taxes that the ATO forces on your quarterly business activity statements. However, if your situation has changed, your pay-as-you-go installment also needs to change accordingly. And let me give you an example. Let's say last year you made a $100,000 profit and you had a $25,000 or 25% tax bill on that $100,000 profit. In the current year, the ATO will divvy up that $25,000 and issue a quarter worth every single time you get a BAS. If your situation, however, has changed, and for example, business is not so good anymore, and that $100,000 profit is now halved at $50,000 profit, you want to make sure that you have a look at varying your pay-as-you-go installment. Otherwise, you're overpaying your taxes throughout the year and it's leaving you in a massive cash flow hole. Yes, you will get that money back when you lodge your annual income tax return, but it might be too late and your cash flow might already have suffered. So you want to make sure you get these right on a quarterly basis. Now, before you go ahead and just vary off your pay-as-you-go installments, you need to be aware that the ATO has scope where you vary your installment too much and underpay your taxes to charge interest and penalties for you underestimating your pay-as-you-go installments. So just be careful, make sure you talk to your accountant before you go and vary any pay-as-you-go installments in order to make sure it is correct. And the final mistake I see people make on their BASs is those who don't review their pay-as-you-go withholding and their wages on a regular basis. And let me give you an example. If you're running a business and it is making a loss, but you are paying yourself an exorbitant wage and that's contributing to that loss, you're actually still paying tax on the wage for money that you're taking out, but your business might not be profitable and might not have the resources to either pay you that wage or even pay the pay-as-you-go withholding on that wage, which is reported on your BAS. So it's important to make sure you're checking in with your accountant and you're regularly having a look at the numbers of your business, for example, the profit and loss, and whether your business can actually afford to pay you the wage it's declaring and therefore can afford to pay the pay-as-you-go withholding or the tax on your wage in that quarterly BAS. So that's it. These are the 5 most common mistakes that I see hurting businesses. And if you want to make sure your business is in a good place, fix these and keep your cash flow in your business where it belongs.